I mean, hopefully it does resolve itself, but I think some of these issues are a bit deeper, run a bit deeper than some of the things you read about in the news. And so I think
See.
I do expect to get those supply chains to get a bit easier next year, and therefore that I think will be positive for metals like platinum.
But perhaps the market doesn't think that inflation is transitory so much that they think that gold is no longer the best vehicle to hedge against inflation. Maybe the market does believe that inflation is here to stay, but they see better things to use to hedge against that inflation, whether it be energy, stocks, or perhaps even cryptocurrencies. What do you think?
I think that the only thing you could probably say, which is new, because obviously nothing else really has changed, other than the tools you can use to fight against inflation in the portfolio. The only thing that's really new is cryptocurrencies. And so from that perspective, yes, of course, you've heard a lot of chatter around Bitcoin and other particular cryptos being able to act as a hedge against inflation. I guess that's really just down to somebody's belief if they really think that that's the case. I mean, so far the volatility has been very high, and we just don't have any kind of empirical evidence over the long run that a currency, a cryptocurrency, can act as a legitimate hedge against inflation. Now, that being said, it's not going to stop people from buying it and holding it on that basis. But I think outside of crypto, the toolkit hasn't changed. Your weapons to fight against inflation are still the same as they always are. And I think gold, I mean, no doubt broad commodities, for example, has seen a lot of inflows. That's been a big beneficiary of the inflation argument. Tips, naturally, a lot of people will go to. But I think gold as well. It's just at the moment, I still see much more risk on kind of behavior. In other words, people buying stocks, people buying other riskier assets versus really kind of accepting, hey, we need to be a bit more defensive here.
Well, other base metals and commodities have performed much better than gold this year. I mean, while inflation has ticked up this year, gold has not. So objectively speaking, it hasn't really been working so far for gold as an inflation hedge in 2021. Things like copper, for example, went up a lot. Was that because of the inflationary aspect, or were there other aspects, other factors pushing up base metals like copper?
I think it's really more a supply-demand issue when it comes to metals like copper, obviously, that really are key in terms of the global economy. And so that, to me, was purely about, or is, I should say, because it's ongoing, the recovery, the global economic recovery from the pandemic and increased demand versus supply, which has been curtailed. And again, over the many, many years, lack of capital expenditure within the space to bring on more supply. So if you look at the base metals, really everything has performed incredibly well this year. Probably really the only standout exception is iron ore, which is down quite considerably. But that's more of a Chinese issue than anything else. But if you look across the commodity complex, whether it's energy, base metals, or agriculture, nearly everything has had a great year.
Okay. If someone were to ask you, hey, Will, look, can you help me out here? I know nothing about gold. Why should I buy gold? What is the purpose that it serves for my portfolio? What would you say?
Well, to me, the gold is like a permanent piece of real estate, right? That you have, I think everybody should have an allocation to gold in the portfolio. And to me, gold is not a get-rich-quick scheme. So I wouldn't think of gold in the same way as you think of some other riskier assets. Gold is defensive. It's a store of value. And it's a different return stream from other assets in the portfolio, which are mainly going to be equities and bonds. So think of gold as being something that's uncorrelated to equity markets and to bond markets. And that's the real value. It's something that is a hedge against the dollar or the weakness of the dollar. And so to me, you always want to have a bit of ballast in the portfolio in case something goes wrong. And so equity market sells off, the bond market sells off, there's inflation pressures, other things. I think having a piece of gold, an allocation to gold in the portfolio is always something that's a sensible thing.
So you're absolutely right. It does hedge against the dollar, and it is a diversifier against other assets like bonds and stocks. But interestingly, when there is a major flash crash, if you will, like last March, for example, everything moves down together. I mean, the correlation between asset classes becomes one. And so we see stocks fall, gold fall with it, and then a recovery takes place. So would you consider gold a hedge against equity volatility in that sense?
Yeah, but I think people have to understand why that happens. And so gold is money, right? Gold is something that's redeemable all over the world. Gold is gold. And what happens is when people hold gold and there's a liquidity crisis or any kind of market meltdown, like we saw in March or like we saw in 2008, the first thing people do is they get margin called for
Mm-hmm.
the more riskier parts of their book, or the assets, the more riskier assets in their book sell off, the widest or the quickest and the furthest. And so they need cash. And what do? Most of the time, they're light on cash in the portfolio, but clearly, if you have cash, use a margin call, and then you sell your highest grade assets, i.e., gold, in order to meet those margin calls, in order to service or insulate the portfolio from those falls. What we see happening is that's what is the original or the first kind of flush in terms of why gold moves down, is because people are selling it to generate cash in portfolios. But after that happens, then people realize, hey, I need gold in my portfolio. I need to own this. I don't know where the market's going. And so then there's a wave of buying, which then moves the price back up. And that's what we saw in 2008, where gold sold off originally for those reasons, again last year. And I think that will always be the case, that it's a blessing and a curse in a way that gold on the one hand is a hedge against these kind of events, but at the same time, it's one of the highest quality assets in the world. And so people are going to use that to their advantage if they've got losses elsewhere in the portfolio.
Mm-hmm. Now, I know that GraniteShares also offers exposure to other commodities like platinum, for example. So let's talk about the other commodities for a minute. We've talked about gold as a hedge against inflation and equities. How would you perceive the other commodities, the other metals, in terms of their purpose in a portfolio, and finally their performance in your outlook?
Well, silver is very similar to gold, so I don't think it's really possible for silver to have a great year in a market where the gold price is not going up. Also, so I think silver is just a more volatile version of gold, and so for an outlook, you need gold to go up. I think for silver to go up as well. The other metals are very different. So you mentioned platinum. Platinum struggled this year largely because of what's happening in the auto industry, specifically the supply chain concerns, because the biggest amount of demand for platinum comes from autos in the catalytic converters. And so the car sales, if we're not selling enough cars, that impacts the demand for platinum. So that metal struggled this year. Palladium to a lesser degree because there's more of a supply shortage, more of a squeeze in that market. However, I think with the supply chains opening up, hopefully that is one part of the economy that is relatively transitory. Again, there's no overnight fix for what's going on in terms of the global supply chains. But I do think that will start to ease a little bit next year. And so hopefully that will be positive for some of these metals that have been beaten down a bit on the back of these supply chain concerns. And platinum is probably the number one in terms of metals that have been beaten up because of it.
So you're saying that the supply chain issue could be resolved by next year, which means we'll no longer have chip shortages, which means that the used car industry is going to suffer a little bit while people can finally buy new cars. Is that kind of the logic here?
I did say resolved. I think it will certainly get easier or
easier. All right.
ease next year.
Okay.
Sorry, and hopefully it does resolve itself. But I think some of these issues are a bit deeper, run a bit deeper than some of the things you read about in the news. And so I think I do expect to get those supply chains to get a bit easier next year, and therefore that I think will be positive for metals like platinum.
Well, speaking of cars, I mean, you've obviously, of course, heard the news. Hertz just ordered, I can't remember the number off the top of my head, but a lot of Teslas, 100,000. Okay, it was the largest order on record, and so we're seeing mass adoption of EVs happening right before our eyes. What's that going to do for the metals complex?
Well, it will do wonders for the metals that we need in EVs in particular. And so, any metal that is involved in, and I should say, not just today's battery technology, but the future battery technology, because that's evolving all the time. So right now, whereas lithium-ion batteries seem to be, they're the dominant market share, if you will. But that may not be the case in a few years' time, because obviously there's a huge part of innovation to try and get those batteries more and more efficient, more and more effective. But yeah, I mean, you mentioned a good point, David, because we're coming up now in a time when the UK's come out and said that they're banning sales of internal combustion engine vehicles by 2030. European Union as a whole by 2035, and then here in the States, obviously, with New York and California signing up to the 2035 date as well. So that's not that long from where we are today before you're not going to be able to buy a gasoline car or a diesel car. So there is a big push into these alternative technologies, EVs specifically. But I think hydrogen is going to be another alternative energy source in the vehicle market. That's something that there's a lot of money being spent on the technology there, something that benefits platinum, for example. But yeah, I mean, the metals that you need for these new technologies to bring about this transition to EVs, transition to a carbon-free or at least a reduced carbon world, I think is the next super cycle in commodities.
Just on that note, the 2030 and 2035 deadlines, are those, like you said, they're just around the corner. Are those realistic, do you think? You think people can actually meet those deadlines, or are they going to have to push it back somehow?
I mean, who knows? I mean, you're talking about politicians and government policy. But one thing we do know is that Tesla is the dominant player in the EVs. The market cap of Tesla speaks for itself. So if you're a car company, I'm guessing you're looking at that thinking, whatever they're doing, we got to do more of it. And if that's making EVs, we're doing. And you obviously see these announcements all the time from everybody, from the big European manufacturers to the big US manufacturers like Ford and GM, et cetera. Everybody's getting in on the EV game. I think that there's a good reason. And I guess I don't have any reason to say that it won't be met, but at the same time, it's not far away.
That's right. So let's put all this together then. Will, what is your outlook for 2022 in terms of the commodity space? Which is your preferred commodity from an investment viewpoint? And I'm putting in gold and silver into the commodity category.
Well, I think next year, I mean, to me, what are we really talking about? We're talking about the reopening of the global economy. Yes. I think in that perspective, the base metals or the pro-cyclical commodities, I think will likely continue to do very well. I think the problems that we're seeing in energy markets can still continue into next year, or will continue into next year. That means elevated energy prices. I think what's happening with the demand for metals, just the broader reopening, not just with EVs and decarbonization, but with just simple demand for all sorts of products which need copper, which need nickel, which need all these base metals. I think that will increase. And so those are probably the two areas I think will probably stand to do best next year. Obviously, if there's an inflation surprise, then gold can do very well. But at the moment, I think it's more about the pro-cyclical commodities for next year.